Let's welcome our second panelist, Mr. Jay Patel. He is the founder and the CEO of India MLS in Mumbai, India.
Hi, ladies and gentlemen, how are you? I hope everyone's doing well. Long day today. As she said, my name is Jay Patel, and I am the founder and CEO of India MLS. You'll get to know a little bit more about that tomorrow, but today I'm going to talk to you about India. I was born in India. It's my home country. I've grown up in the US, but I'm back in India today. I reside in Mumbai. The objective of today's session, let me load it up on my page here as well. Is to talk about the Indian real estate market, poised for continued long-term growth. We're going to look at this objective, India, from two perspectives. With any investment that someone makes, there are two different ways to look at it. One is on a short-term basis, and the other is a long-term basis. So, and you'll see where what I'm coming from. But let's first consider the long-term objective. And the facts are, let's focus on a few critical points. The market size right now, these are the initial background data here. It says it's the largest by 2028. That's pretty substantial, especially from what you've been seeing so far. And many of you may have already seen the headlines. The growth, the astronomical growth the country has had, it's been one of the top 2 or 3 economies in the world. So this is not going to be a huge surprise when you see this. But the market size of real estate in India is expected to increase at a compounded annual growth rate of 15.2% during fiscal year 2008 up through fiscal year 2028, and estimated to be worth $853 billion by 2028. Increasing share of real estate in GDP would be supported by increasing industrial activity, improving income level, and urbanization. So let's look at the factors, the main sectors that are actually creating this big, huge potential for long-term growth. The first factor there are 4 primary factors I'm going to look at. One is the residential, second is the commercial, third we're going to look at is on a retail level, and let me go through the fourth one here is going to be on the hospitality industry. So let's first start with, I've already got it here, right? Income. Demand for residential space is expected to grow sharply. I'm going to focus first on, because I've been told I've got short time today compared to what we were originally expecting, so I'm going to go relatively quickly. What we like to do when we look at these scenarios is we compare a couple of different areas. First, we look at the market as a whole, and what's a scenario in the existing market, as it's shown at the top. Then we'll look at various different key drivers that are actually forcing these potential scenarios, and then ultimately, what are the notable trends that are happening in the market. So, in the residential space, the localized fragmented market presents opportunities for consolidation with only a few large pan-India players. Those are companies like DLF, which is the largest, and Unitech. There are more foreign players might enter the market as FDI norms have eased recently. Basically, foreign direct investment, the government is becoming much more laxed. They want to see more money coming into the country, and so this is actually expected to help fuel the residential space. Let's look at the drivers. The main drivers that are going to help this market do well is rapid urbanization, the growth in population. Unfortunately, this is a good and a bad thing. India's been battling the population issue for many years, as you know, but in this case, it's actually working as a positive. Rise in the number of nuclear families, easy availability of finance. Up until recently, it had been pretty difficult, and now finally, it's getting easier to obtain loans. Many middle-income families are actually getting loans to buy, where in the old days, it used to be primarily cash transactions. Repatriation of NRIs and HNIs, rise in disposable income. As the economy is doing well, there's more disposable income, more spending, and potentially a lot more spending goes back into real estate. The demand to grow, now let's look at the notable trends here. The demand to grow at a compounded annual growth rate of 2% over the period 2013 through 2017 across 8 cities in India, and they're highlighted up there. As you see, NCR, that's the main area by Delhi, and that's expected to have the greatest growth on the residential side. Developers are now focusing on affordable and mid-range categories to meet the huge demand. I've heard on a few other sessions, many people were saying that affordable housing is very important, and the government of India is also very much pushing for that. And so that's one of the areas that we're expecting to see substantial growth. Let's go to the next page here, and now we're going to look at commercial. Whoops, did I go back? Let's go up, here we go. Commercial space. So Metro's driving demand for commercial space. Let's look at the scenario first. Few large developers with a pan-India presence dominate the market, as very similar to the residential space. The operating model has shifted from sales to a lease and maintenance model. The key drivers for this market, rapid growth in service sectors, mainly, as you know, India's been known for IT, so that sector's been growing significantly. There's also a rising demand from MNCs. If you're wondering what MNCs are, it's listed up at the top, multinational corporations. Also, there's demand for office space in Tier 2 cities. We see that Tier 1 cities grow substantially. So now that many of these cities have become overpopulated, what's happening is that the population is growing outward and also into some of the second-tier cities, and now we're seeing significant growth in second-tier cities. They present excellent investment opportunities. Then we go down to the notable trends. And that's Mumbai, NCR, and Bengaluru. And I say NCR, this basically is the Delhi market. Mumbai, Delhi, Bengaluru account for 60% of the total office space demand in India by 2017. That's what's projected. And Bengaluru is likely to experience highest demand over 2013 to 2017, followed by Mumbai and Delhi. Let's go to the next page. And we're looking at the retail space. Retail space likely also to see strong growth. Currently, retail accounts for a small portion of the Indian real estate market. Organized retailers are few, and the organized retail space is mostly developed by residential and office-based developers. There's a booming consortium in India, and organized retail sector is growing at 25 to 30% annually. So this actually presents a very good opportunity as well. India's population below 30 years of age is having exposure to global retail, are expected to drive the demand for organized retail. So we're having, again, the population, the younger generation that's coming in is really expected to help this part of the segment do very well as well. The notable trends in this market, NCR accounts for about 30% of the total mall supply, and 53% of demand of the total mall space in India is expected to come from the top 7 cities. It's not unexpected. The top 7 cities are outlined over here. Again, I refer that NCR is really the Delhi market. Pune, Mumbai, Kolkata, Hyderabad, Chennai, and Bangalore. You may not see one city that's actually my homeland, where I was born, is Ahmedabad. You're going to hear much more about that. Incidentally, it's also the city that the Prime Minister is from, Narendra Modi, who was elected into office a little over a year ago. That's his hometown as well. Let's go on to the next slide. We're going to look at the hospitality market. As I mentioned, there are 4 primary sectors: residential, commercial, retail, and now hospitality. The scenario here is NCR and Mumbai are by far the biggest hospitality markets in India. Also, of course, the 2 of the biggest cities in India, and for that matter, even in the world. It's followed by Bengaluru, Hyderabad, and Chennai. Besides hotels, the hospitality market comprises of serviced apartments and convention centers. The key drivers in this market is a robust domestic tourism industry. This is increasing. It's a very good sign for a country when the tourism is continuing to grow. The increasing global nature of Indian businesses boosting business travel. Tax incentives for hotels and higher FSI. Expansion of physical infrastructure during the 12th five-year plan. And then lastly, let's look at the notable trends. Serviced apartments appear particularly attractive within the hospitality space. Government initiatives to promote tourism in Tier 2 and Tier 3 cities is generating significant demand for hotels in such cities, especially for budget hotels. Today, if you go there, you'll see that there are a number of hotels, both high-end and mid-level, but I think the real demand is going to come in from both the budget as well as the mid-tier. So not necessarily just from the 4 and 5 star, but the 3-star hotels is a good size market for that as well. Let's look at the key contributing factors for continued growth. You say, Jay, this is all great data. You looked at 4 sectors and they're all solid. But really, what is going to make this market move at the rate that we expect it to move? So let's look at that. And this is the key contributing factors. So it's being driven by these 6 major components. Urbanization, it's a growing economy. Policy support, the government has been very, very helpful, and they want to see the country grow and become a major powerhouse. Many of you may or may not know, but India is the largest democracy in the world. And they want to make sure that the economy continues to grow, and hopefully even faster than it has been. Easier financing, that's been a huge component of the growth that's been happening over the last few years. Epidemiological changes, and lastly is growth in tourism. Let's start analyzing these very quickly. Economic growth, boosting real estate. The Indian economy has experienced robust growth in the past decade. In some areas of the country, properties have quadrupled in value. I kid you not. You could have bought a piece of property for $1 million US. It would be worth north of $3 to $4 million US within 10 years. It's unbelievable. The demand for commercial properties being driven by the country's economic growth. India's real GDP grew by 5.6% in 2014 and would rise to 6.4% this year in 2015, compared to most emerging economies, which are averaging approximately 4.9%. China, one of the largest, or one of the world's strongest economies, grew by 7.7%. So India is pretty close, right by approximately number 2. Let's look at the next one. And let's consider urbanization. India's urban population, as a percentage of the total population, was around 32% in 2014 and is expected to rise to 40% by 2030. And that's another huge factor as to why you're going to see, this particular market, the real estate market, do well. There's going to be much more purchases, more larger, what we call nuclear families, and many people moving into the bigger cities. As well as, of course, as I mentioned, Tier 2 cities. Better wages and better standard of living is expected to result in an increase in urban population in India to above 600 million by 2031 from 406 million in 2014. Government initiatives, such as various urban development policies and programs, are expected to contribute to enhanced urbanization. Urbanization and growing household income are driving demand for residential real estate and growth in the retail sector. So as I mentioned, urbanization is a major factor as well. Another big, huge factor is the FDI, that's the foreign direct investment in real estate, is on an upward trend. Basically, the government is becoming much more lax. They are trying to make it easier for people that are foreign investors to be able to invest in India. In the old days, it was not so easy, and that's going to play a big role. Let's go to the next page. Oh, I've been told that I'm getting close to my time here. Let's see. Government policies, I'll just tell you that as I mentioned, that this is helping a lot as well. Let's look at short-term view. I'm going to focus on just a couple more minutes to explain. So basically, as I mentioned, in the long term, the upward trend is excellent. It looks very good. On the short-term level, I'm going to just quickly go through these. India real estate market short-term. Market is a bit inflated today and appears to be poised for a pullback. Supply inventory is increasing due to overconstruction. We saw this happen in China. It's also happening in India within a very short time frame. Demand has decreased. Market pricing had become extended too much, too fast. That's not good for any market. New government is cracking down on what we call the black money, which is the illicit money. Thus, investors are not able to hide this money in real estate as they were able to before. Inflation has moderated countrywide during the past year. There are other attractive places to invest today, such as the Indian stock market, which up until recently, in the last 5 years, has been relatively stagnant, but now is starting to pick up again. So that's becoming another attractive area. Many Indian banks are sitting on large amounts of bad debt, which is not good. We've seen what happens when that is the case in non-performing assets given to major infrastructure companies. And lastly, rental yields are as low as 2 to 3% compared to the government 10-year bond, which is yielding almost 8%. This is a great place to put money if you want to just park it away in a safe investment. So people say it may not be worth the risk to put it in real estate immediately. So, in short, and to summarize, what we're saying basically is that the long-term view is very, very positive. The country is poised for long-term growth, but in any real estate bar cycle, in any country, and anywhere in the world, real estate can be, it goes in cycles. There are times when you do very, very well, and times when it's peaks and troughs. So what we're seeing is a market that's going like this, maybe here today, continue to go here, but during that process, you may have some dips. And I think we're at the point where you're looking at a possible dip before you make a nice move back up. I hope this was informative. I apologize for going really, really quick. I look forward to hopefully seeing you guys over the next 2 days. In fact, tomorrow morning I'm also going to be having a session at 9 a.m. And then lastly, tomorrow afternoon, our product, India MLS, will be showcasing that and giving you a full demo. So I welcome you to come and join us. Gigi, thank you for the opportunity.